discuss the requirements of the proposed solution. And I want you to just firstly know that Actis have sort of made this based on a certain set of requirements and assumptions at the time, but there'll be certainly fine-tuning and suggestions that the agencies can make to us, and we can make additions. Okay, so what is the Act and when does it apply from? So the government has committed to pay bills on time. As part of this commitment, the legislation has been introduced which requires that interest is paid on any undisputed invoice meeting certain criteria that's not paid within 30 calendar days of the date it is received by a public authority. It also applies from the 1st of November 2018. So what that means is that it's probably going to kick into effect after the 1st of December. So whilst it's not something you've had to sort of consider in the immediate of now, it will be in the preceding months. Okay, who is covered by this Act? From the interpretation of reading the Act, it's all government agencies basically, public corporations and any various statutory bodies, and there's quite a list of those in South Australia who are using Sage 300. Okay, so as you're all probably fairly well aware, the main criteria for determining whether interest is paid is based on the invoice is valued at $1 million or less, and that's the GST exclusive amount. The interest has to be calculated on the penalty rate of more than $10. It's issued from a business that's incorporated under the Corporations Act. There are a few exclusions. That list is available to you all. You would know which entities that you would have to make payments to. And we'll discuss how that we can sort of filter that through with the solution later. It also is obviously to do with goods or services, so any foreign currency is obviously not included in this, and that the invoice supplied to you is rendered correctly. So it's got to make sure that it meets all the requirements for that. Okay. After talking to a few agencies, a few of them have sort of mentioned that they've currently got workarounds manually for this. And while we're suggesting that you automate the process, is that one of the requirements is that this process should not slow down the payment of other invoices. So what we don't want this process to be is cumbersome on the agencies that need to run it and the staff that are required to fulfill the requirements. So we also want to make sure that you don't incorrectly calculate the interest, because what they're saying is that if this starts to occur, the advantages of paying that interest will be soon offset by the amount of recovery and corrections and the back and forth that will be required to correct these things. The big reason that we see it is basically peace of mind. We want to ensure that you're compliant, and that when audit come along and say to you, are we meeting the requirements of this, you can be confident in your response in that our software is automatically doing it. We are not relying on someone to have manually caught this transaction. So that's the main importance of this. Okay. You guys have probably done far more analysis on this than I have, but I've basically put up there how one of the interest is calculated presently, and that's based on the requirements that I have read. So it's actually going to be on quite large, invoices are going to have to be a certain amount for this to sort of kick in, and then obviously over a certain number of days. And then also it's going to be very dependent on the cash rate at the time as to whether the interest is going to calculate to over the $10 that's required for this transaction. So on the screen here is just a simple example of a transaction occurring that way. Okay. So from the agencies that I've spoke to, we've talked about that, yes, this could be done manually. And so right now, how I foresee that the manual process would go would be that you'd start your payment run, you generate your pre-check register, and you'd have to review all of the documents in there manually yourself to assess whether that invoice had exceeded the payment terms, whether it was on a correctly tendered invoice, and all the stipulations that are required. So right now it's relied on the user factor of assessing that. You then have to go and work out, okay, that one meets a late payment transaction to be required. So I now have to go off, open a new invoice batch, enter a interest invoice, code it to a GL account, then probably get someone to approve that batch, post that batch, and then start the generation of your payment run again. So, and then when that payment run's generated, I've got to check to make sure that that invoice is included in it, so it's going to appear on the remittance advice clearly, and then I will post it. So whilst it's certainly possible, it means that someone has to add extra controls in on every payment run that they generate. Okay, so with the Aptus proposed solution, what we're saying is that we want the system to automatically look and review this. Now, Serge is going to do a demonstration of the product in a moment, but what we're suggesting here is that you'll enter all your invoices during the month and post them as normal. And then your payment process will still start as normal. It will create and generate the payment batch. Then our application will actually review that payment batch, check if it meets all the criteria for a late payment interest calculation. And if it does, it will actually automatically go and create that open invoice batch, post it, and add it by appending it to the existing payment batch. So all the steps that we talked about in the previous step, it's going to sort of accumulate them all and do it by the push of a button. It will also allow the user to sort of intervene and check the RBA rate and those kind of things, but it will have generated it without any manual intervention. So it will be relying on the system's controls and checks. Okay, so this slide I've basically just put together reading the regulations. There's lots of things to sort of consider, and right now our application may not meet all of these, but they're things that we need to be aware of when considering this. So you need to go, well, where is the interest going to be posted to? What GL account? What terms code will go on that invoice so that when it's generated, how will I make sure it's immediate? Because there's regulations in place as to that payment has to be made within 48 hours, the interest payment of the original invoice. What vendor groups, how to exclude what vendors that shouldn't be considered in this. If they're to do with the Building and Construction Act, they may not need to be included. The amount of the invoice, certain things are included, some aren't. What rate gets picked up? The probably most complex part of this calculation is going to be how do we calculate interest. So whilst the shared services site has got a tax calculator on there, you kind of want to rely on the system to be able to generate that interest calculation. There's not many agencies that I'm aware of that still do checks, but there is different treatment of the payment date as to whether it's EFT or check, so we'd be able to certainly make the system accommodate that. And then also what we've just been reading in the latest sort of requirements is that we would love to build in some reasonableness checks, that someone couldn't accidentally make a payment that didn't meet some sort of guidelines that had been set. Reading the requirements, there is recovery of if you incorrectly charge interest, then proceedings will occur that will create paperwork where if an agency goes, well, actually, we need to recover that interest back from you. So you want to get this right when you calculate it for the first time. Also then, there's certain requirements that the remittance needs to print and look like to sort of indicate to the supplier that you've made your late payment interest calculation and what are the details of it and how can they check that it's correct. Okay, so I'm actually just going to kick over to Serge now, and he's just going to show you how the solution is at present in Sage 300, and then afterwards we'll open it up for some questions and you can let us know if this is what you're expecting.
Okay, hello, my name's Serge. What I'll be showing you is two AP invoices ready for payments. One invoice meets the criteria, the other doesn't. I'll then show you the generation of the AP payments run, followed by the application's functionality. So what I have here is a batch with two entries, and I'll open that up. we have one for an amount of $7,900 and the document date of last year. Clearly, if I was to pay this today, this would be part of the criteria. The second one is a $9 amount on the same date of last year. Because this falls under the $10 limit, this will not be picked up for late payment criteria. So the standard operation, as Stacey mentioned, is you'll go into Sage 300, you click on the Create Payment Batch, and you'll do your register and generation. First of all, you'll set up all your criterias, and for here, I'll just pick up today's dates. I will say that the criteria of due date of today. I'll select all of my vendors, and I will hit register. So this will generate a list of what will be paid if you were to actually pay it. As we can see, the two documents there, one for $9 and one for $9,900. You could then print this out as part of your standard auditing processes. Moving on, we'll generate the payment batch. So now, payment batch 28 was generated and it's in the system. This is where you would now run our application, the late payment calculator. So as you can see, the user interface is simple. There's a big list and a batch number. We'll go in and select the batch number, standard Sage 300 screens. There's our batch. We'll select that. It loads the entries in. You can confirm that the entries that the application has loaded is in fact correct, and here we have our two documents. We'll then press the Calculate Late Payment Interest button. This has gone through and identified a late payment for this document and a late payment amount of $513.50. The application will then create the single invoice, add it to the AP batch, post it, and then append that to our payment. It's as simple as that. The process is complete. We can confirm that by going into our payment batch list. We can see the two documents there, and we can see the invoice that it's paid the late payment against. In our system, the process appends a L, or affixes an L to the original invoice and correctly identifies the amounts. And now it's the simple process of posting your AP payment entry and running your EFT or checking process as per norm. And that's all. That's the manual process automated using the late payment calculator. And as a final demonstration, I'll show you the cash rates functionality. So inside of the late payment application, we can see at the top here, it says a cash rate of 1.5% and the effective cash rate. In the top right-hand corner, there's a button to maintain your cash rates. Cash rate maintenance is as simple as setting the effective date. Let's say it's the 4th. Setting the cash rate of 1.5 or whatever it may be, and your penalty rates as specified by the legislation. You will hit save. It appends it to your cash rates table, and that will now start using that new cash rate as it becomes effective. So I've set the cash rate for the future. It's not going to be taken into effect until the date is that date or greater than. You can go through and maintain cash rates. So if you say, for instance, we got the cash rate on the 13th incorrect, it's a simple case of, right, it's 2%, hit save, ask you whether you want to update this date. Yes, you do. There we go. The cash rate's now 2%. So cash rate maintenance is a fairly straightforward process, and that's what we try to make the application be, a straightforward process to a manual operation. Stacey.
So that's a really great demonstration of how easy this product could make this whole process. So what I'm going to do now is just sort of open it up to any questions and any feedback that you guys might have on this product for us.